Today we're going to talk about this amazing book, Common Stock and Uncommon Profits from Philip Fisher, and we'll see the 15 points to check before investing in a company. So Philip Fisher had a great track record in investing. He's even got testimonial from Warren Buffett. So you see at which level he is, and he really wrote a nice book, and he gives away what he does to find some great stock, to outperform the market, to have some great performance. So we'll see here the 15 points that he evokes in his book, and we'll see how we can better handle it, how to do it for your personal account, and how all of this works. So the first point that he is talking about is to ask yourself this question: does the company have products or services with sufficient market potential to make possible a sizable increase in sale for at least several years? And this is a valid point in the sense that so many people go on companies that are in a market that either is so much saturated that you don't really have a good potential of growth, or in some markets that are so little that you don't have a potential of growth. And at the end of the day, the stock price is following the earnings. So if you cannot increase the earnings, at some point the stock price will not go up. So this is the first point. It's kind of obvious, but I think it's a good reminder. Second point is, does the management have a determination to continue to develop products or processes that will still further increase total sales potentials when the growth potential of currently attractive product line have largely been exploited? So basically, is the company trying to find new products? Is the company trying to innovate, or the company is just staying on what she already had? Okay, so this is something you want to know, because if the company don't try to increase sales, don't try to create new product line and so on, it will at some point stop growing. And if it stops growing, the market cap cannot continue to grow. We had a bit this problem with Apple, that since few years it's not growing anymore. And does it look like they are trying to find some new product to continue to grow? Some people may say yes, but for now, from what we see, not really, okay? Not really. They may try something, but not that much at the moment. That's why Apple is still doing well on the stock market, but that's why it's in less and less portfolio, and people are selling it. Also, the price that you have for the company, like the PE ratio, is very high. So here's what he say. At first glance, point 2 may appear to be a mere repetition of point 1. This is not the case. Point 1 is a matter of fact appraising the degree of potential sales growth that now exists for a company's product. Point 2 is a matter of management attitude. Does the company now recognize that in time it will almost certainly have grown up to the potential of its present market, and that to continue to grow it may have to develop further new markets at some future time? This is why some companies like Google, Amazon, even Microsoft are doing incredibly well, is because they continue to develop on new market. They are not focused on one market. They continue to develop everywhere to find some new way to earn money, some new area where they can earn. So that's what makes them, in my opinion, great companies. Point number 3, how effective are the company's research and development efforts in relation to its size? You have some companies that may spend so much in research and development to produce nothing. Like they will spend billions every year to make 100 million of sales. This you don't want. You want a company that obviously is profitable, but a company that will still continue to do some research and development to continue to get some new product line, some new products to gain some market share, to get into new markets. It's a bit similar to point 2 that we saw before. Point number 4, does the company have an above average sales organization? This is a bit difficult to find this information, because every company have a different sales organization, but try to see how easy is it to sell from them. Does it look like they are very good with the clients? Okay. Does it look like the company have like a good mentality when it comes to sales and so on? For example, you can see in Apple, like the sales organization is kind of good. Like you see the Apple store and everything. Like stupid example, but if you go in a city and you see at Apple store, a Microsoft store and a Samsung store, all the time you will have Apple stores that will be full of people, while Samsung or Microsoft store, way less people and sometimes even empty. Like, even in some great location in London, I remember that you had Apple store and next to it Microsoft store. Now they are closing the Microsoft store. They are closing because nobody goes inside. Nobody. While they go in Apple store. Do people every time buy when they go in Apple store? No, but they created an experience around it, which is nice. So this is what you're aiming for. This is what you want to look. If the company have an above average way of selling things. Number 5, does the company have a worthwhile profit margin? Okay, the only reason for considering a long-range investment in a company with an abnormally low profit margin is that there might be strong indications that a fundamental change is taking place within the company. If you have low margin, the problem here is if there is a problem one day, if the market is less receptive or the competition increase with a low profit margin, you don't have much margin of safety, you don't have much way to move, we don't have much way to be strategic, because if you increase your advertisement budget, if you increase your staff and so on, your margin will decline. And if your margin is already low, declining from low, it means that you will not be profitable anymore. And you don't really want to have this. So as he says, the only reason to consider a company with a low profit margin, it's a company that is able, in the future, that will be able to increase its profit margin. Best example I have for this is Amazon. Amazon profit margin was not really good a few years ago. Okay, you can look at operating margin and so on, not really good. But they put it the cloud with AWS, advertisement revenue, they added Amazon Prime, and all of the things that they're adding make now the profit margin way higher, and the profit margin is continuing to increase. This is what you want to see. You want to see companies that increase their profit margins. Number 6, what is a company doing to maintain or improve profit margin? This, you have the information from the 10K, the 10Q, from the conference call, and all of this. Read this and you can see what they try to do to improve. Some company will just try to reduce cost, to use more AI, and now it's a big word, like they will use AI to increase margins. Some company will just find a way to order more, maybe because they have more volume, so they will decrease the price of goods, so it will increase the margin. You have plenty of way to increase margin. So have a look at the 10K, 10Q. You might find some good information about it. Number 7, does the company have outstanding labor, and personal relations? Okay, this is about people working there. You don't want a company that don't treat well their employees. I mean, you want people to be happy to work there. So of course, not every employees are equal, in a sense that in some jobs, like here, there is a lot of jobs in a company that whoever does this, whatever company it is, people may not be very happy to do it because they are not very valuable. I'm not saying valuable job, but they don't add a lot of value. They are important, but they don't add a lot of value. But with a valuable area, okay, with qualified people and so on, are they happy to work here, or are they just wanting, or they just want money, and as soon as they will have a better offer somewhere, they will just go? Okay, this is something very important. One series of figures that indicates the underlying quality of labor and personal policies in the relative labor turnover in one company as against another in the same area. Equally significant is the relative size of the waiting list of job applicants wanting to work for one company as against other in the same locality. What you can do to try to investigate on it, because you might not have a lot of information about it, but on LinkedIn, you can type the name of a company on LinkedIn to see people that say that they're working there, and you can message them. Hey, how is it to work there? I may receive I'm receiving offers to work in this company and in another company. You just invent. Since you're working there and since you have some experience there, what do you think about this? What do you think about the management? How are they? How do you feel valuable here and so on? You can ask those questions, and not everybody will answer you, but some may answer, and you can have easily some information about, does the company have an outstanding labor and personal relations? Number 8, does the company have outstanding executive relations? You want as well that the top of the company, the management and so on, have good relations. So this is also something that you want. You don't want to have the the manager like feeling like the company is not valuate him like correctly and so on, because he's kind of directing everything. Number 9, does the company have depth to its management? This is like, does the company I'm not saying replace somebody, but can you count on everybody in the management? Or is it just somebody that they took because they have nobody to take? Okay, you have so many companies like, for example, Intel had a bit this. They put a new CEO because apparently they didn't really have somebody that could fit here, so they took the potential best fit that they found, but they didn't have like a line to do this job of very good people. So yeah, you want to have some depth in it. Number 10, how good are the company's cost analysis and accounting controls? You don't want to invest in a company that you feel they're tricking too much an accountant, that you feel that there is not enough control, because one day or the other there will be a lawsuit, and this lawsuit will probably put the company down. Okay, even if it's on short term, it will put the company down. So try to avoid this. You can also have some great opportunities from companies that have been put down because of this, if they react correctly, if they hire better accountant, if they hire some third parties company to do the accounting and so on. But generally you want to have good control. For this you might have some information about it in the 10K, in the 10Q. You might have good things about it. Number 11, are there other aspects of the business somewhat peculiar to the industry involved, which will give the investor important clues as to how outstanding the company may be in relation to its competition? Okay, you want to see that it can be stupid, but you can have some little details that will tell you that these companies may do better than competition. A stupid example, but it's, for example, in Costco, I think they have this $1 or $1.50 hot dog. They don't make many money on it and so on, but they want to keep it. The fact that they want to keep it is just that shows that they want to treat customer well, and they know they're not making money from this. But people will be happy to go to Costco, have this hot dog, and then do their shopping in the supermarket. Okay, so this is little thing like this that shows that the companies really want to create a good relation with customers and might do better than competition. Okay, engineering that is constantly improving the product can prove considerably more advantageous and more static patent protection. This is something good to note, because another example, Intel in 2019 or something like this was the first company in the United States that has the most patent. I don't remember if it was Intel or IBM. So really innovative, great patent. The problem is, like, they were not improving the right things. They were not putting patent on the right things. They were not improving their main products where they were earning money, and they got outpaced by competition. And Nvidia outpaced them, AMD outpaced them, Apple outpaced them because they created their own chip. Like, everybody literally outpaced Intel because instead of making their product, their important product, better, they decided to take some, to get innovative, so put some patent everywhere. So yeah, they missed a point here. Number 12, does the company have a short range or long range outlook in regard of profit? Okay, the investor wanting maximum results should favor companies with a truly long range outlook concerning profit. Best example again, Amazon. You have also Brookfield that are in this, very good in this. Amazon, if you read Jeff Bezos' letter to shareholders, you can see that he really have a very, very long view. And now this view is giving as well from Andy Jassy. Okay, and Andrew Jassy, the new CEO, keep this view of very long terms. They think long term all the time, 10 years ahead, 20 years ahead. They don't care about short term things. And this is something that you like when you're an investor. It's something that you want in a company, especially if you want to outperform the market over the long run. Number 13. In the foreseeable future, will the growth of the company require sufficient equity financing so that the larger number of shares and outstanding will largely cancel the existing stockholder benefit from the anticipated growth? So basically, you don't want a company that is issuing too many more shares, okay, And even if there is growth, because let's say if the company grow by 20% thanks to an acquisition or whatever, but they needed to create 30% more shares, it totally cancels. You're not benefiting from it, and you're even losing money from it. So you don't want this. So you need to be very careful about this. And it's basically just capital allocation. Is the capital that they will allocate create shareholder value or no? If they need to create new shares to acquire a company, it doesn't mean that it's bad. You just want that the growth, thanks to these new shares, will create more profit in your pocket than less, okay? So that basically it will increase EPS and not decrease it. Number 14, does the management talk freely to investors about its affairs when things are going well but climb up when troubles and disappointment occur? You have so many companies that all the time everything is amazing, everything is good. When they don't really have good results, like they don't talk about it. It's like, I'm not saying they try to hide it, but no, they just don't go on it. They just focus on the good things. They just try to focus, okay, to take your attention to, instead of the bad things that happen and say, okay, this is bad. Now we're trying to find solution. For now, the solution that we might have found and we'll try is this, this, and this. We'll see what it goes. We'll let you know. And the next quarter, some company don't even do this. Some company have bad results, and what they decide to do is to not talk about it. We want to know. We want to know why you have bad results. We want to know how you assess the situation. We want to know if you're able to correct this. Every company might have a bad time. Okay, this is normal. We don't care if the company have a bad time. It's not a problem. We want to know if they will be able to pass it, to outperform it, and to get better after this. The management that does not report as freely when things are going badly as when they are going well usually climbs up in this way for one of several rather significant reasons. It may not have a program worked out to solve the unanticipated difficulty. It may have become panicky. It may not have an adequate sense of responsibility to its stockholders, seeing no reason why it should report more than what may seem expedient at the moment. In any event, the investor will do well to exclude from investment any company that withhold or try to hide bad news. Okay? So if you see that the numbers are not well, okay, and the company does not acknowledge it, like just it's a red flag. Just take it out. Okay? And last one, number 15, does the company have a management of unquestionable integrity? You don't want a company where the management have bad things, have done bad things. You really want integrity, okay? Your definition for integrity. Everybody have different definition from it. Everybody have vision from integrity. But with your vision of it, try to only invest in company where you feel that the integrity is well, when you feel that the management is honest with the direction it's going, with what they are saying. If you have all these 15 numbers when you invest, I really believe that you can outperform the market, that you can have great result, and that you will do well. So that's all for this video. Let me know in the comment section if you liked it, what is your favorite point, what are some other points that you like to see in a company that wasn't mentioned here, and I will see you in another episode. Bye.